Good morning, it's Jonathan Barrett with this week's Market Buzz. Lots of data out in the States last night, which was really good, or actually on Friday night. We're going to have a little talk, but just briefly. We had US inflation last week as well, 3.8%. The previous was 3.3. Producer prices, 6% forecast was 4.7. The forecast was 4.7, came in at 6%, well above expectations. Retail sales, year on year, 4.9, forecast 3.3. Industrial production higher than the forecast of 0.4, came in at 1.4, and manufacturing production came in at 1.3 versus a 1.2 expectations. Quite interested to see what those numbers do. We'll have a deeper dive later in the program, as to what those numbers actually mean to the economy and what should we actually think about it. Remember, we are short the equity markets at the moment, so it's a little bit of a turning point, and let's see what happens. Okay, China and the US had meetings, as we know. I guess when it all comes to it, it's beneficial for Trump to go over there to have a discussion. I'd like to be a fly on the wall as to what was actually discussed, but it seems to be that they're on the same page on certain areas. But you can't expect it all to be the same. But I think pretty impressive that the fact that Trump did go over there to try and resolve some of the issues. And I think that's probably one of the only really good things I can say about Mr. Trump, President Trump. But he is very proactive in trying to get deals done and trying to get the economy back on track. So that can't be all that bad. Okay, in Australia, we had the NAB business consumer confidence. That was a little bit better than forecast. It was expected to be down 32, came actually down 24, but still quite negative. And as we know, the RBA raised rates by 0.25% to 4.35%. That puts a differential between the US and the Aussie in favour of the Aussie. So we can continue to see those trends for that Aussie, and also the equity markets come under pressure. But also a little bit more on that a little bit later. I guess the most important thing here is that swag of data that we had on the US. And in my mind, it was a pretty impressive, to tell you the truth. Although we are short the equity markets, and a turn will be, but I'll come to the reasons why we'll remain short a little bit further. But I guess when you look at the inflation rate, we did expect, because of the high cost of energy and because of what's happening in the Middle East, that we should get a push. I guess when you look at it, 3.3 expectation coming in at 3.8, it's above that area where the Fed has a concern, and that to me remains a worry. Same with producer price index. The forecast was 4.7, it came in at 6%. Once again, a little bit aggressive. We've got to expect these things when our input prices are significantly higher. That's just not oil, that's also some of our commodities, because if you remember, our copper's had a good move to the top side. So that inflationary push, we know it's there, but I think the market's actually saying, well, it's going to be temporary if, in fact, the US and Iran can come to some terms. And I think the market's quite comfortable with that concept. And I think if it's comfortable with it, then we can see it go up. But I think the rationale for the Fed to do anything, I think, is that they do nothing for the time being and we just weather it. But I do think that interest rates in the States will remain a little bit higher. Now, I guess when you look at the inflation side, let's look at what the consumer's doing now as well. And I think you can look at that when you see retail sales. Now, retail sales were a whopping 4.9%. Now, that's up from the 3.3% that we expected. And that tells us that, and also capacity utilization, 76 versus 75. That tells us that the consumers are not too bad in terms of paying these prices. So they're not confident, although we see business sentiment from the Michigan reports lower on record lows. The consumer's actually sort of taking heart on this. So you've got an economy which is, have inflated prices moving here, but you've also got the retail consumer also relatively happy. Now, what does that mean? It sort of means that, how sustainable is it? It means that it is still quite inflationary. And I think the Fed at the end of the day will have to keep rates longer, higher and longer. Higher, and I don't know whether they'll push rates higher, not unless we get inflation starting to really ratchet on. But I think if it stays the same and we can expect the core inflation rate to remain relatively contained, then I think you'll find that the Fed won't move and push rates higher. In fact, they'll keep the status quo for some time. So I think that's my preferred outlook. What does that mean to equity prices? I guess, it means that, interest rates are high. It's going to eat into corporate profits. Remember, corporate America has already and continues to reduce labour forces. Remember, that's the quickest way to profit is reduce your labour costs because that's normally the highest cost in most businesses. So I think that's going to be something that will maintain. It is something that they will continue. And I think the US corporate will come under pressure. Now that's going to eat into corporate earnings, and I do think that the equity markets will come back. Whether or not they'll come back into a deeper correction, let's see how the conflict in the Middle East resolves itself. If it's longer, then the correction will be deeper. If it's short, then any correction I think will be bought into. So that's it. Sorry, I'll just close that. Sorry about that. So when I do, sorry about that, guys, if you can just edit that out, it'd be great. Okay, so when we look at it in the US, I think the economy is doing what it's doing quite nicely in the US. We've still got a lot of unknowns that'll come into the market, which we've talked about before. But whilst it's here, I think that the status quo will be the same, and I think the Fed will remain relatively muted in what it does. Okay, so I guess when you look at it, let's see, what happens over this week. I do expect equity prices to come under pressure. We did make a note in the trade focus for this week because we are short equities, particularly the US 500, US S&P 500. And I think the technical side's saying correction, fundamentals are saying a breather, so correction. So we've noticed that as a trade for this week. And being short, we're going to add to our positions because we think we'll have a bit of a correction there on the S&P 500. So if anything there, remain short. I would actually like to see the market close below 7,300. If that's the case, then I'm going to look for 72.50 and then hopefully down to 7,000. So that's basically where I'm looking for this trade. It has had a major rise, so I think a correction's just a fair thing to see. Okay, so that's what we've got this week. What else do we have? I guess really when you look at it, what sort of data do we have out? I guess Federal Reserve release of the minutes. Let's see what happens from there. We've got PMI surveys, manufacturing indices. We've also got that important University of Michigan consumer sentiment survey that's coming out. I guess they're probably the main things that should sway the market. Okay, let's have a bit of a deeper dive now into some of the positions. And let me just share my screen. Right, and as you could probably appreciate, we've got the S&P straight out of the guns. And the S&P, as you can see, it's had quite a good rally. And I wouldn't be surprised. Let me just do that there. Can I show you that? There we go. We've got some good divergence here. Now, I always like divergence when it occurs. That means that we get higher highs but lower closes within that time series, and we're really seeing that here. So if anything here, it makes sense to go short. That divergence. This is all pointing down here in my stochastic. So on a daily basis, I think we're in for a correction. The question is how far will this correction go? You can also see here that on the hourly chart that we're certainly there in correction mode. So, but I like that divergence there. So keep close to that. Okay, let's have a look at the local markets. And as you can see, yeah, we've been in correction mode for some time. 8,570 is where we're at. High side 9,065. Don't see why it can get to those levels, given that we're going through a tightening cycle. But anyway, that's the way markets fold. I do think it's in a range. 8,400 is the lower end of the range. Probably anticipated to get there, but it is interesting here because we are getting some opposite divergence here. So I'll be interested to see how that plays out. As you can see, very good support here at 85.60. If that breaks area, then we're lower for longer. Righty ho, let's have a look at some of our favourites. Gold, as you know, we reduced some of our positions in gold. Quite happy for that. We are still core long. I like 4,500 as a good support level, and I think dips will be well looked after. Where momentum-wise, we're just cruising around, and I'll just use up time. So if anything there, it's quite happy for it to go sideways and quite happy to remain long. Silver. We look at silver now. Now, silver's been very interesting. We've had quite a large correction. I actually feel that dips will remain well supported for silver. Remember, we've got China as the number one major buyer of physical because they need it for the electric cars and everything. So I think dips there will be well looked after. I think going sideways, 70, 50, anywhere around that's good support for the market. But I do like it around these levels. It is a buy and dip and has been for some time for me. Okay, let's have a look at the crude price. And let's go West Texas Intermediary. As you can see, very hard to do anything there with the crude. So if anything there, it's mucking around. And I think if anything, it'll be a greater sell on the rally. But we've really got to see what happens. So I'd probably stay clear of the crude market at the moment. Let's have a look at the Aussie because we've got some long positions there. Aussie, a little bit of correction mode now. That does make sense. You can see we've also got negative divergence here, bearish divergence. So if anything, I think that Aussie does come back a little bit. Even if it comes back to 69.50, certainly a good areas to continue to buy it. So I still like that area. Remember, the Aussie US differential is firmly in favour of the Aussie. So that should be okay. Right. Well, I guess we've covered all the main things. Hope everyone basically has a good week and safe trading. And we'll talk to you next week. Bye for now.